Hi, I'm Marc Lewyn, President of GV Financial Advisors, and I'd like to welcome you to the GV Confidence Minute. In an informal survey of a dozen clients recently, I asked, what worries you most about the current economic environment? The unanimous answer, inflation. They point to increases in oil prices, decline in the dollar, and rising interest rates. When even my rabbi and my psychologist father-in-law talk about inflation, I know we're in a strange and fearful time. To us, this falls into the always interesting category of the great and scary negative prediction, which history suggests almost never comes true. In fact, when something bad happens, it's almost always something that we never had any clue about and that we never expected. A great example, let's look at what the great experts said about deflation. In 2003, Gary Shilling, a prominent economist and regular columnist for Forbes magazine, wrote, "Deflation, How to Survive and Thrive in the Coming Wave of Deflation," and appeared on all the major news shows for several years predicting deflation and associated woes for the country. Subsequently, we had the most profound rise in the stock market and real estate market in decades. And as recently as November 19, 2008, Bloomberg, among many others, noted that the Consumer Price Index report signaled deflation, which could worsen the economic downturn by making debts hard to pay off. And added the chief economist of a major bank, on that very same day, told us that deflation scenarios are very possible, quote unquote. Amazing that 8 months later, the great new and scary fear is about inflation. So what about the current inflationary crisis? That same Mr. Shilling told CNBC.com that he doubts inflation is a problem because consumers are in a savings spree for the first time in 25 years, and without spending, prices will stay low. And when the government historically funds huge sums, as they did in the Great Society spending of the Johnson administration and the Vietnam War, we did experience big inflation. But it took more than 10 years for that inflation to take off. And as Gary Shilling says, he expects the Fed to be aggressive in pulling back its spending when the recovery comes, and expects that savings to finance a lot of the current deficits. So check this space 10 years from now, or even 10 months, and we will see if inflation has hammered us into submission, or whether it was another nightmare that went away when we all woke up. The betting here is that we will wake up, only to go on to the next nightmare scenario, because this is how our economic minds are hardwired. Thanks for watching the GV Confidence Minute. I'm Marc Lewyn, and I will see you next week.